Thematic investing is a hot keyword. When you hear about ESG investing or disruptive tech or healthcare, for example, these are all different themes. Is it all hype? Just a very cool marketing buzzword, or does it give us alpha? How does it compare with index investing? Because if you can't beat the index, right, then what for do you invest in themes? We talk about the risks. Are we too concentrated on segments? And what frameworks should we use to analyze different themes? This episode is sponsored by Syfe. You can check them out at syfe.com, syfe.com. Hello, my name is Andrew and welcome to another Chill with TFC episode. In this series, we talk to interesting people with relevant experience and insights to help us learn from their perspectives so that we can create the life we love and manage our finances well. Today, we'll talk about thematic portfolios. Let's welcome Vice President, Head of Business Development at Syfe, Samantha Horton. What do you think about the saying that thematic investing is hype? You've heard of it?
Yes.
People say that to you?
Yes.
Hype, marketing,
I think there is a big distinction there in terms of what we mean by that comment, right, or that question. Because I think thematic investing overall has been around for a long time, maybe in different forms, but perhaps it was more traditional themes previously in terms of investing in certain sectors, countries, etc., and getting a more, I suppose, tailored exposure that way. But now we obviously have a list of themes which seem to be multiplying every day, right? And so I would say maybe there could be some aspects of hype within the thematic investing when you look at particular themes within that, right? So I guess one to call out would potentially be meme stocks, right? Which obviously was all the rage, earlier.
That's
earlier
a theme,
this year.
meme stocks.
Yes,
Meme stocks
that's
is
definitely a theme,
Okay.
right? So I think they even have some ETFs which have been created on the back of meme stocks, right? So and if you look at that, obviously, then if you invest in those in the wrong time, then you can really get I suppose get hurt, right? But I don't think I would say the same about overall thematic investing.
I've definitely seen more advertisements, more write-up about it. But like you were saying, some form of themes exist for many years.
Yes.
Right? It's just recent years that you see more interesting themes that come up.
Yes.
But the more common ones, ESG, healthcare, what have you. I mean, let's take ESG for example. And people will be saying that, greenwashing. Tell us a bit about greenwashing, and the whole appealing to your motivations to do good for this planet.
Sure. I would say obviously that is a big concern for a lot of people investing in ESG and in my even prior experience, we have done a lot of work around ESG scoring, etc. Right, and I think there is an increasing focus on what are the most important aspects of E versus S versus G for particular companies that we should look at, right? And what is really important to call out. I think one thing that I would say is a lot of companies get pushed into or put into the ESG bucket when they are basically outperforming on certain criteria within their benchmark, right, or within their sector. So, for example, there are oil companies which can be put ESG, put in ESG baskets because essentially, they are doing better than their peers, right? But I think if you did want to take a perhaps more purist view, I would say invest in companies that have a value proposition that is actually doing what you believe in, right? So, I guess one example of that is there's a lot of companies, which focus on perhaps, alternative meats, right? Or secondhand clothing, right? And those types of things where actually the overall business is about, essentially perhaps, doing better, right? Than, or changing business models from, more traditional ones where perhaps it wasn't so positive for for the environment, etc.
Give us an idea of how a retail investor should approach thematic investing. There's so many themes. I'm sure the way you approach each of them is different. Is there a framework go into it?
Sure. I would say it really depends on why you're investing in, or why you want to invest in a theme, right? I think traditionally, if I talk about frameworks, we talk about the core satellite approach, where you should put 70%, 70 to 60% of your money in a more passive investment, and then 30 to 40% in satellite investment, which can be more one of these themes, right? And then if I take it a step further, essentially when you're assessing a theme, is it you're trying to diversify away from your particular exposures in the remainder of your portfolio? So for example, perhaps you're heavily invested or heavily exposed to U.S. stocks, and you want to have more China or emerging market exposure, right? And so therefore, you choose a theme which is in line with that, right? Or you are investing in a particular belief, right? You care a lot about the climate, and you want to invest in sustainable companies, and so therefore you go for a more ESG portfolio, right? And or are you trying to create or capture alpha, and therefore the I guess more traditional frameworks come into play more, right? In terms of what is your risk tolerance? So what is the risk and volatility of that portfolio? Is it a very high risk portfolio, and therefore you should take that into consideration as you assess this basket, or this theme, sorry. Or is the valuation of these companies and this sector very high, and is that something that you are aware that you're getting exposure to, right? Particularly if I give an example, with inflation coming, and some of these tech companies, right? If you're investing in let's say technology theme, right? These tend to be high growth stocks, and they can be at risk with or at high valuations, and they can be at risk with the onset of inflation and higher interest rates. So I think some of these things are things that you have to take into consideration, right? Maybe one other thing I would call out is that how if you're trying to capture alpha, how sustainable, right, is that theme that you're investing in, right? Do you believe that it's going to be around for a long time, right? Or is it so quote unquote a fad perhaps?
So tell us more about this capturing alpha first before I move into the investing
Sure.
into what you believe in, investing into the future, right? Because I think these two are kind of something new for me, because sometimes we go into the numbers too much as we go into investing, want to make money, right? That's why I want to look for alpha. But at the same time, there's this appeal to your senses or emotions to invest in the future that you want, and which is why some people are going into investing in ESG kind of stocks, right? But you still don't want to lose money, even if you're doing it because you believe in the future, right? So how should I approach it?
I think one thing I would say is still to diversify. But if you were looking at a specific theme, I think you should think about things like what am I buying, right? And not just the I guess the what these companies are doing, but where they are valued again in the market. So valuation would be one. Again, I would kind of touch upon how sustainable, like what do we believe is going to be the future of this sector or thematic that you are investing in.
Earlier on, you mentioned about ESG scoring, and obviously you have some experience in this. Tell us about ESG scoring and how do I evaluate ESG companies and stocks?
Sure. So I think there's a number of providers out there who do a lot of work around ESG scoring, right? And I think there are then ETFs which essentially take that criteria and put them into various baskets, right? So I think the simplest way is to take that approach where you are relying on these third parties, I guess the likes of MSCI, et cetera, which obviously have significant experience in this field. I think it does become difficult, to perhaps do the analysis yourself because a lot of this, a lot of the information, is not easy to find on these companies, to be honest, right? So I think one approach is trusting the experts, perhaps, and taking the scores that they use, and investing in the relevant companies that are scored highly, or the ETFs which have those companies in them, right?
So
It's already added a layer of filter for you.
From my layman understanding, there's a sort of checklist, and these companies are ranked and given a scores, and you can look at all these reports to decide on how to evaluate all these companies that you might be looking at investing.
Yes. So, these companies are typically scored on all the criteria, environment, social, governance, right?
ESG.
And on criteria that is relevant to them, right? I mean, if we take environment, for example, they would look at your process. If it's a manufacturing company, they would look at what is your manufacturing process, right? What is your supply chain? How much does that pollute, right? Do you clean up after yourself? Do your plants, basically, having good policies, where they are making sure that they are not impacting the environment around them, right? And things like even workplace diversity would come into it, right? And if we go to particularly, if we look at the governance side, you would look at things like how many women are on the board, right? How is there diversity of thought, right? Perhaps in the company and things like that, and those things are also important for ESG scoring.
Okay, so how does that correlate with looking at the financials of a company? Because you've mentioned all of ESG is nothing to do with the numbers
Sure.
and whether the companies are making money, right? I guess I am stuck in this traditional mindset. Look at the numbers, valuations. We're looking at whether they have workplace diversity, whether they are protecting the environment.
Yeah.
But does that translate into more alpha? I mean, I'm not sure if these two goals are going against each other.
Sure. So perhaps maybe two ways to answer that, right? I think firstly, whether it impacts the financials, I think is perhaps maybe more questionable. I think some of these things, particularly on the governance side, there is some evidence that companies do perform better when they do have better, obviously, governance policies. They have better, more diversity, etc. Right? So that can kind of play into it. And if generally the company is run well, they do care a lot about these environmental and social issues as well, right? So, I think that would be perhaps a more looser correlation than, if we look at alpha, right? Because alpha is what does the stock do in terms of the performance in the market, right? So how much money does it make you versus benchmarks, right? And I think that's perhaps a little bit more interesting to look at because there is evidence, that basically companies which improve their ESG scores get more inflows, right? And therefore, that creates that does help to create alpha because if more money is essentially shifting into these companies, perhaps they are valued higher. They are given a higher valuation versus their peers, which have lower ESG scores. And therefore, attract more capital, et cetera, then, we can see some outperformance in alpha.
There are obviously too many themes out there. Let's go into some of the hottest ones. Let's go into healthcare because it is a topic that we're really concerned about recently. What do you think about healthcare as a theme?
Sure. It's definitely one that has gotten much more attention of late.
Past 2 years.
Yes. As we can imagine, I think, it's one of those things where pre-COVID, I don't think anybody would have known the name of many of these pharmaceutical companies, let alone the name of or what vaccine you're getting. I don't think you ask when you get your flu jabs, etc. Who made it? It's never been a big concern for people, right?
Yeah.
And obviously now there's a lot more focus on this sector and this theme, and also the companies within it, right? And I think that is something which is obviously it's a big question. It's a question mark in terms of how sustainable again this is, right? And I think my own view is that obviously we have an aging population, which is only going to require more healthcare investment and requirements, and therefore, a lot more money is going to have to go into this sector. And one other thing is that these tend to be more value stocks. They tend to be, perhaps a diversification from your typical technology companies, et cetera, because if we're worried about inflation, and we do see that start to play, a role in the performance of markets even more, then we could see some of these value stocks and sectors, such as healthcare, start to outperform.
So the role of healthcare stocks would be more of a defensive role, and to take care of inflation as well, as compared to investing in growth stocks. Is that what you're saying?
Exactly. So this could be, a way to protect yourself against a lot of volatility, which we could expect in the market over the next, 12 months or so.
Okay. Do themes generally outperform the market?
So I think that really depends on which theme, and it depends on your time horizon. So, I think obviously, if you pick the right theme at the right time, you can have significant outperformance. And if I guess one example of that very popular one would be ARK, right? And ARK Innovation, which is obviously a play on disruptive technology and high growth stocks, right? And so if you invested in it last year, I think you would have basically returned over almost 150%. However, this year, if you had invested in that same theme and that same ETF, you would have been down almost 25% in a market that was up 25%. So, that's one example where I think, themes, it really depends, right, in terms of the right timing, et cetera. And that's also, why we believe that, you should diversify, because generally, the studies have said, that passive investing does, over a longer term time horizon, give you better returns, right? And you don't, you essentially, if you diversify, you essentially don't run as many of these risks in terms of highly volatile portfolios and potential down years, etc.
All right, we were talking about hype earlier on, and do you think that ARK ETF contributed to some of the hype or interest in this area of investing?
I think a bit of both, right? I think that we've obviously seen a big increase in retail investing, and I think we've seen a lot of these themes and these ETFs have gotten a lot more accessible, right? And an example even for Syfe, right? I mean that platforms like Syfe has made it much more accessible and affordable for retail investors to capture some of these themes, right? And I think because of that we've seen obviously large inflows into perhaps much more concentrated pockets of the market, right? Such as technology and ARK, being obviously an example, right? So not sure if you can call it a contributor, but obviously until this year, been a big beneficiary. Let's put it that way.
Should people be concerned that some of this hype could be driving up the entry prices of such stocks?
Yes, I think that's a very relevant topic right now, right? And I think again using the example right of ARK, you basically can if you enter some of these I guess very high risk, let's say, themes, right? Then you can get hurt, right? And that's why we typically recommend that you only put a portion of your investments and your portfolio into perhaps some of these themes which could be quote unquote more hyped than others, right? And therefore more risk in terms of your entry points and when you enter the market.
So what other risks should we take note of when investing in themes?
Obviously, as you mentioned, timing is one of them, right? So some of these, themes can be perhaps have had strong inflows and strong performance over a shorter period of time, and therefore there are some risks that you do catch things at the top, right? And for that and many other reasons, again, I would kind of say that the biggest risk is really concentration risk, right? So you should weigh up how much you're willing to how much you're willing to lose versus how risky the portfolio is, right? And therefore allocate accordingly to that theme.
Or you mentioned core and satellite, right?
Yes.
So I mean, generally as a rule of thumb, like how would you advise someone, in terms of how they allocate, for example, to the index, to thematic investing, to bonds and other asset classes? I mean, of course, it depends on your personal goals, but how do you approach this personally?
Sure. So generally, the rule of thumb is 60 to 70% in a core diversified portfolio, and 30 to 40% in a satellite slash thematic portfolio, right? And let's call it whether that is in terms of a basket of stocks or portfolios, or single stock allocation, right? I think I would put it both in that category, right? And obviously that skew would depend on perhaps your level of expertise and how much you want to back yourself, how your strong belief is in some of these themes and time horizon and things like that, right? But generally, we recommend 60 to 70% to remain in a core diversified portfolio.
Okay. In our conversation, we're bringing up disruptive tech, high growth companies a lot, and well, it is a theme. So, what is the Syfe thematic portfolio for such companies called?
Sure. So we have a portfolio under our Syfe Select offering, which is exactly as you called disruptive technology, which essentially captures all these companies like cloud computing, gaming, some companies which are involved in blockchain technology, etc. Right. So at the very should I say disruptive end of the technology spectrum, right? Which also, as you mentioned, tend to be higher growth stocks and higher valued stocks as well.
Now let's talk about China. Could you walk us through on this theme on investing in China company?
Obviously, a very polarizing topic right now in terms of, I think, the camp that believes that China is going to recover, that it is, maybe now is definitely the bottom, and if you take a longer term perspective, that there will be significant returns there, right? Versus perhaps the other school of thought saying that or believing that essentially with China it is too risky now, right? That perhaps the clampdowns that we've had with in regulatory clampdowns that we've had, and I guess too many sectors now to name really, has is going to have a lasting impact on investing in any Chinese related companies, right? And that essentially the perhaps the tone coming out of China that profitability, wealth, etc., is not really being celebrated or encouraged anymore, means that also there is a risk for any company really who does well and has any form of outsized returns, that they could see potential extra regulation, right? So I think that is one for me that really depends a little bit on your own personal view, and obviously, and hopefully an educated one. But I think even if you ask, perhaps the people who have studied it the most right now and are very in tune with what's happening in China, I think it would be hugely polarizing in terms of where are some of these companies and where is China going to be trading in in 12 months from now or 24 months from now, right? I think it's a very, very difficult one to call, right? I think if you perhaps ask my my own personal view, I think it really depends on your time horizon, right? I think if you're talking about is it going to significantly outperform and recover in the next 12 months? That's a very high risk trade, I'd probably say. But if you're talking about 3 to 5 years or 10 years from now, these could potentially be very good entry points for China.
But the option is there if you want to invest in it.
Yes, the option is definitely there. Syfe Select also has a China
Right.
thematic portfolio ready for anybody who wants to take that view, right? But yes, and I think it's one of those things again where you allocate accordingly to your risk tolerance, right? So if you wanted to place a small bet on the recovery, obviously, as with a lot of things. The further something has gone down and it has, I guess, has been underperforming, there's obviously a potential that it can recover at some point, right? And you could get outsized returns for sure, right? If we do see at least even some stability, right? I think in China.
Right, so each theme has its own characteristics, and it helps to have some knowledge going in. There's no one size fits all solution moving into thematic investing itself, right? You're saying that you have to diversify, and you might appeal to your interests, or you might have some knowledge in it. Any last piece of advice for listeners who wants to move into thematic investing?
I think that the typical one that I would say is definitely invest in what you know. I think I've even perhaps learned that the hard way, but I think being educated and investing in something that you really have conviction and some strong beliefs in is important, right? And I think that can work with whether it's single stocks or also on the thematic side.
Did you say you learned it the hard way? Or is there a story there?
No, I think obviously I've spent most of my career looking at consumer stocks, and I think when I've left the institutional investing world, I have realized that in my own portfolio that the stocks which have outperformed are definitely the stocks which I've known and followed for a long time and have a good understanding of, and the stocks that I thought I'm just going to take a little punt there, may or may not be in some Chinese names, have definitely
confirm nor deny.
have definitely underperformed significantly.
Okay. All right. Thank you, Sam. Thank you for sharing. Thank you for watching this video. If you found it useful, like, share, subscribe, and feel free to leave your comments. You can also join our Telegram group, follow us on social media, and sign up for our weekly newsletter. Everything is in the description. For more content, check out thefinancialcoconut.com. Anyway, the last part is we ask more personal questions.
Sure.
General views. Last 3 questions for you. Right. So what is one of your core life principles?
I probably have to go with no pain, no gain. I think you can, I guess you can use this in both the financial or non-financial sense. But would you like me to talk about the financial or non-financial? How about I ask you?
Let's both. Both. Yeah.
Okay. So from a financial context, I think that does imply investing early, saving right for a better future, and to achieve financial freedom, right? And also in terms of, I think it is something where I believe that even if you are feeling the pain in terms of perhaps potential losses in your portfolio, to take a longer term view sometimes, and I think that's an important lesson for people to have, right? And I think perhaps in the non-financial sense, then I would say that I believe in hard work, and that you reap the rewards of that going forward, right? So whether that be in work or working out, or anything like that.
What is one piece of financial advice that you think should be shared more often?
So one thing that I think has really resonated with me, I think since I've joined Syfe, and is that basically the message of time in the market is more important than timing the markets. And that I think is a very important thing that I think, as much as it sounds cliche, and I think we all maybe have heard it before multiple times, but I don't think that many people actually follow through with it. And I think, if we did that, we would all see, better outcomes financially, right? And managing our wealth, because, if you miss a significant peak or rally because you were waiting to time it, that can be very, very, I guess, hurtful for your returns, right, or negative for your returns. So, that's one big thing that I would say.
What is one area of your life that you're giving additional focus right now?
As much as I can, it would be trying to spend as much time I can probably with my daughter, who recently turned 1 years old.
Okay.
Not easy when particularly in an industry like this, and working in a startup. So yes, trying to spend as much time and quality time, I think, that I can.
Thank you for your time. Let's get you back to your little girl.
Thank you.
Thank you. Here's a word from our sponsor. This podcast is sponsored by Syfe Private Limited. All forms of investments carry risks, including the risk of losing all of the invested amounts. Such activities may not be suitable for everyone. Reference to a specific security are meant for illustration purposes and are neither intended nor to be construed as a recommendation or advice to buy any specific security. Please do your own research before making any investments at your own risk. The materials presented are not and should not be construed as financial advice, nor an offer to sell any products or services. Past performances are not indicative of future performances. This advertisement has not been reviewed by the Monetary Authority of Singapore.